So welcome everyone to Learning to Love Audits. And we will now have Sasha introduce our speaker, Chris Griffin.
Thank you, Kristen, and hi, everyone. Happy to be here. DV Leap is a proud and grateful Fair Chance alum. I was so excited when Kristen offered me the opportunity to introduce Chris Griffin to you today. Chris has been on DV Leap's board of directors as our treasurer now for 7 years, and his smart and thoughtful leadership has been invaluable to us. And so it's really an honor to be able to, in turn, introduce him to you. Chris is a CPA and partner with the international firm CohnReznick in their Bethesda office. He has specialized expertise in the nonprofit sector, and he's a member of their not-for-profit and education industry practice. He brings over 15 years of experience providing nonprofit services in assurance, tax, and advisory areas. And he also frequently leads and/or contributes to conferences and seminars for nonprofits. And if that wasn't enough, he is also responsible for developing internal training curricula for CohnReznick staff, and he conducts training seminars for staff on a range of topics, including audit and accounting theory, government and other agency, another regulatory compliance, and technology applications and systems. So it's my pleasure to turn you over to Chris, and you could not be in better hands.
Thanks so much, Sasha, and good morning, everyone. And before I get going, I want to do for myself one final sound check and make sure that everyone can hear me okay. Thank you. The only reason I wanted to double check is, of course, right before Gretchen started talking, I unplugged my docking station and lost power to everything except the battery running on my laptop, and was frantically reaching for the power cable to get it plugged back in to bring up my monitors and my camera. But happy to know that everything is working well. I can see everything, so just wanted to double check that. But anyway, thanks, Sasha. Thank you, Fair Chance, for the opportunity to speak this morning. When I think about the title of Learning to Love Audits, and myself being an auditor and doing this for almost 20 years now, I don't kid myself that being able to convince everyone that you can love the audit process is a realistic goal. I don't take that personally. I know that there are some war stories that people have going through audits. So I try to have perspective and understand that if there's, legacy tension between auditors and those who are being audited, it's probably due to situations that I can relate to that frustrate me in my day-to-day. When I think about that, I think about the fact that an audit is something that, from the direction of, say, our clients and having to be involved with that, it's something that you're told is part of your job description. But, you kind of think it really isn't, and it's just something that adds more time to your day. And I get that. So I think about my day-to-day as an auditor, and, when I have other responsibilities that, my opinion, don't really relate to my day-to-day and take up extra time, and how frustrating that can be. So, I try to keep that in mind when I'm thinking about my clients, and when we're asking them for information or asking for their time, and how that can be stressful. Because at the end of the day, especially with not-for-profit organizations, we definitely understand that you want to be about delivering and fulfilling the mission of your organizations. And sometimes the audit process just gets in the way of that. And so I don't take that personally. So anyway, but as I talk today about learning to love audits, what I hope I can do is simply do a little bit more to explain, what the purpose of an audit is. So I think some of that frustration also comes from the fact that you're going through something that, because it's not your day-to-day job or responsibility, it's all new, and it's not something that you're going to deal with. You deal with it at one moment in, say, like your fiscal year, and then you're done with it. And maybe you just don't understand what the process even entails. Some of the terminology, things that you're asked for, are things that you don't deal with day to day. And, I know when I'm dealing with something new and it's not something that that's going to continue in my day-to-day job or in my life, and they have to understand new concepts and things like that, and the investment of time it takes to understand that creates frustration for me. So again, I can understand where that can come from. So hopefully can talk through some things, help to just level set and explain just the fundamentals of, what the purpose of an audit is, some basics about what's going to happen during the audit process and why, and some tips on how to manage that. And then briefly, we'll talk about some things that are happening mostly due to the pandemic. So I'm going to get going and I'm going to share my screen. And can everyone see the slides? Okay, great. Oops. Okay, so, and everyone can see just the slides, is that correct? I'm showing the right screen, is that good? Is that, everyone can see just the slides? Okay, good. All right, so I also have to include this disclaimer. I won't read it word for word as you have it for your reference, but the short of it is that, I or anyone else at our firm who speaks externally to share our knowledge and experience, we do our best to communicate information accurately, but we can never know the details of any particular situation in a forum like this. So please, understand that this is mostly information that is designed to provide guidance and is not specific professional advice. So with that being said, from our agenda, I'm going to cover an overview of what an audit is and contrast that with some alternatives to an audit you've probably heard of and how to think about the implications of those other options. But because this session is about learning to love audits, we'll pivot back to only talking about audits for the rest of the session and discuss first what an auditor's opinion is, what it's saying, what it's not saying, variations to that opinion, and the implications. Then for the meat of the session, we'll talk about various aspects of managing an audit. We can conclude with some things to think about due to the pandemic, mostly from the perspective of dealing with federal awards. And then we'll close with some resources at your disposal to help with audits and simply managing your organization better as well, and take some questions. So here we go. So an overview of an audit. So, the core question is, what are the benefits of an audit? And there are a whole host of things you can think of, but some of what you see here, starting with, first, just under the professional standards that I'm bound to and that, others in the profession are bound to, we render an opinion that comes from an independent perspective. There's a whole process we go through to make sure that we're independent of the organization that we're auditing. And that's supposed to give you some comfort that the work that was done to render that audit, comes from an independent and reliable perspective. So going along with that independent perspective, you're getting a second set of eyes. A situation I can think of when it comes to an audit and maybe being able to identify something that was unintentionally missed is when, say, we're looking at a lease agreement and we're looking at it to get evidence that the amount of rent expense that an organization has recorded is reasonable, it looks correct. But maybe going through that lease agreement, we discover that, it's a 10-year lease and in year 5, there's some kind of escalation on the rent. And, has the organization accounted for that in their budget and bringing that to the attention of management? One of the audit requirements we're having to deal with looking at a lease to begin with, in addition to the amount of the rent expenses, making sure the statements say something about what the ongoing commitment is to that rent expense. But, that audit process can provide that second set of eyes because, your day-to-day purpose of fulfilling the mission of your organization isn't to be in the weeds with necessarily your lease agreement, as opposed to that's something that the auditor is going to take a look at and looking at the organization from a more holistic perspective. So when it comes to internal controls, there are requirements of the audit process that require us as auditors to ask questions to understand how certain things happen within an organization, especially as it relates to things like the process for receiving cash, dispersing cash, and going through that process of understanding those key areas can identify maybe some weaknesses in the design of the operations and the internal controls of an organization and provide some guidance just through that process. When you talk about training and assistance, just the very nature of having to have a back and forth process of asking for information to support the audit process, talking through why certain things are being recorded in a certain manner, that just back and forth process between the auditor and an organization staff can really be a training situation in and of itself. And then certainly as new accounting issues come up, your accountant or your auditor might offer trainings to the staff to get them up to speed on what to look for and things like that. And so because of the implications potentially to making sure something's reported correctly in an audit, so that the audit process itself can provide that training for an organization. When it comes to reduced cost of capital, I think everyone can appreciate that if an organization's trying to do something like obtain, say, a loan from a bank is going to be a lot easier to work with if they can get a hold of some audited financial statements and get, just a little bit more assurance about the health of the organization and their ability to pay back the debt. So certainly an audit can help with reducing the cost of capital to an organization. And I think another way you can think of reduced cost of capital to an organization is all not-for-profit organizations are trying to obtain resources and support to help fulfill and continue their mission. And one of the key ways to do that is to, whether it's obtaining federal funding or obtaining grants from, say, foundations, having an audit is a differentiator and being able to not only obtain those dollars, but simply to be qualified to even apply for them. So, oftentimes, certainly there are requirements that you have to go through to stay in compliance with those federal dollars or those foundation grants, but they're free if you can get your hands on them. And so when you talk about reduction of cost of capital, certainly a loan, but that would have an interest rate, but then there's just access to free support that an audit can help open the doors to. So alternatives to an audit. Again, we've talked about the benefits. The question that often comes up is, especially if you put aside, and we'll talk about this a little bit later, about what are some external factors that might drive the need to have an audit. A question comes up, well, what can I do instead of an audit? And the two most common things that are discussed are reviews and compilations. So, going back to an audit, the core benefit you're getting is that the audit opinion is providing what's known as the concept of reasonable assurance. So that's like a very technical term. When you go to a review or a compilation, the main difference in contrast to that from an audit is there's a decreasing level of assurance. So from a review, the term goes from reasonable level of assurance to a limited level of assurance. And what's happening there, the big difference is that with a review, that limited assurance is because the accountant isn't required to actually verify numbers with essentially third-party evidence. So what that means is an audit, that reasonable assurance is coming because, and if you've gone through an audit process, your auditor will send the request for copies of invoices, and they want to see that those invoices, the amounts of the expenses that were recorded, agree to what was recorded in your financial records. In a review, the auditor is only required to ask questions if something just doesn't look right, but they don't have to actually verify with some kind of third-party evidence that what's being recorded actually makes sense. And so that's why that level of assurance goes from reasonable down to limited. And then a compilation is no assurance whatsoever. And so really the way you want to think about a compilation is that it's really, the purpose of that is really just to have something that kind of looks like a financial statement. And all that the opinion is saying on that is, this is a statement, but I'm not telling you that anything within it is reliable in any way, shape, or form. So that takes you back to why, again, if you just remove external factors such as a grantor or some kind of federal requirement, why an audit has a higher level of benefit to an organization. And when you think about that, then it's important to understand, well, if you're going to go down that audit route and try to maximize the benefit to an organization, it's important to understand once the audit opinion is provided, what does that mean to your organization and at the conclusion of the audit? So we're going to talk about that really quickly. So because both an audit and a review opinion are making some kind of representation about some level of assurance, again, reasonable assurance for an audit versus limited assurance for a review, the overall conclusions on the opinion are similar. But it's important to understand what's happening with those opinions. And again, the point here is to just, as an organization, understand what are you getting when you're getting that opinion and what are the implications related to that. So before I talk about an opinion, it's important to understand that you will often see situations, and our firm is no different, where there's, today in 2022, usually what you're getting for an audit, audit report financial statement is a PDF file. And there's an opinion, there's a cover, there's financial statements like an index, some pages in the front with charts and numbers. And then after that, a bunch of pages with words, call them footnotes. But you may notice that if you're looking at an opinion from one firm or financial statement that has an opinion from one firm with a financial statement that has an opinion from another firm, and if you look at a bunch of statements from one firm compared to a bunch of statements from another firm, you may notice that, one firm A, all the statements with their opinions look the same. The layout of the charts are the same. The font style is the same. Every time you see a report from X accounting firm versus Y accounting firm, and their font looks the same every time you see that. And the reason that it's like that is because under our professional standards, as an auditor, we can do what's known as assist in the preparation of the financial statements. And for those of you who currently undergo audits, it's likely that your auditor actually prepares those financial statements for you and then also has their opinion. But in practice, what's really happening is the only part of that package, that PDF file that has the opinion in the financial statements, that's the responsibility of the auditor, is just that opinion. So like those 1 to 2 pages that lays out the results of the audit itself. And everything else in the financial statements is really the responsibility of the organization. And then the opinion is just saying, relative to these statements behind this page that has has the firm's signature on it, that all of that, we're just taking an opinion on how reliable is that information. Okay. So I say that to be clear, just that even when you see those complete financial statements, again, the opinion is really the part that the auditor is responsible for. So getting that out of the way, an opinion, the good version of an opinion is what's known as an unmodified opinion. You may hear that referred to as a clean opinion. So that's kind of what's known as kind of the highest and best use opinion that you can get. So that's the ultimate goal. That's lets anyone who's using those financial statements know that your organization has obtained the ultimate objective with an audit and obtained a clean opinion. Okay, but if the opinion is not unmodified, it's, you guessed it, known as it's a modified opinion. And so there are 3 types of modified opinions. So we're going to talk about that. But again, when you're talking about an unmodified opinion, what the conclusion is that's being made by the auditor is that the financial statements that someone's looking at here, they should have some comfort that they are presented in a manner that conforms to the technical term is generally accepted accounting principles. And that's important because what that means is that someone should be able to look at a financial statement of a social service organization, nonprofit of $5 million in revenue. If they want to compare that to another social service organization of $5 million in revenue that also has an audit, they should have some comfort that with the way that they're seeing the information presented in those financial statements and the footnotes that they see in those financial statements are they conform to some standard set of how that information should be shown and how the information that's being disclosed, that everything that should be there is there, and it makes it relatable. So you can get some comfort that you can look at other financial statements with other audit opinions that have clean opinions, and the information is relatable. So you can have some comfort that if you look at program expenses on a functional expense, that the information that's there is presented correctly, and that you can get some comfort and reliance that if someone's saying they spent this amount of or incurred this amount of expenses for this program function, and it's a similar program function to what you may have at your nonprofit, that it's relatable. And that just helps with just comfort in the marketplace and with other not-for-profits that, things are consistently being shown and presented. So that's really what the goal there is of an unmodified opinion, to just level set how the financial statements are being shown. So then you get to a modified opinion. And within that, one type of a modified opinion is a qualified opinion. So when you have a qualified opinion, the wording's going to change. And there are 2 types of a modified opinion. So one is called what's known as a single deviation or multiple deviations from generally accepted accounting principles, or what's known as a scope limitation. And really quickly, so just to make it easy to understand and digest, you can think of a deviation as something that is showing in the financial statements hasn't been recorded correctly, okay? Versus a scope limitation is something that is in the financial statements, the auditor wasn't able to get enough evidence to render an opinion that that which is being reported is reliable, okay? Both of those are very bad, and the opinion is going to be clear about that. So if you have a modification because, and you go back to what I was saying in terms of that unmodified opinion is really designed to give everyone comfort that everything's relatable between organizations. If it says there's a deviation and it's saying that these contributions that were recorded are not recorded in accordance with GAAP, then that's a red flag to a user of a financial statement that I can't trust that the amount of these contributions that were recorded are accurate or reliable. Or if they say we weren't able to obtain enough evidence to conclude whether or not the amount of receivables that this organization has are actually collectible, and there's therefore a limitation on the scope, that's also bad. So qualified opinions are not good. Those are bad and they don't help at all. So then you have an adverse opinion, another modification. So before, when I was talking about like a deviation, that's like one area. Adverse, it gets even worse because what the auditor is saying is, I might have said that contributions aren't reliable, but now I'm saying basically all of these, if you really look at these financial statements in whole, none of it's reliable. That is kind of a death to an organization to get an adverse opinion. So it's basically saying there's nothing here. We attempted to actually perform an audit, but we can't tell you that there's anything within this audited financial statement that's actually reliable. And then finally, a disclaimer of opinion. So, there are situations like talked again about maybe a limitation of scope, but it can also be if something happens during the audit and there's an issue now with the independence of the auditor, and that needs to be modified and disclosed. Or if there's an issue with the auditor concluding that there's a concern that the organization may no longer be able to continue operating, that would be, a disclaimer about on the opinion. And so those are, also not good situations. So, the takeaway here is, the goal here is an unmodified opinion. And we'll talk a little bit about that teamwork aspect of things and, what it takes to make sure everyone's on the same page to meet that ultimate objective. Okay, so I want to transition to managing an audit. And before I do that, I've been talking for a little while. I want to make sure that nobody has any questions about anything that I've talked to at this point. And feel free to dump that in the chat. And I guess you can unmute your microphone as well. Okay. All right, so managing an audit. Okay, again, why would a not-for-profit need an audit? So we talked about what the benefits of an audit is, what the benefits of an audit are, but what are some other circumstances that could just simply require an organization to have an audit, right? So, this question you have to get is like, when should I have an audit? Sometimes your hand gets forced by circumstances based on the types of activities that your organization has gotten involved with. So first of all, just your general locality and the level of operating activity that you engage in could require an audit. So, on this slide, it lays out, since this is, DC metro area type audience, lays out what the audit requirements are, depending on if your organization is organized in DC, Maryland, or Virginia. So for the District of Columbia, there is no specific audit requirement, just because you're a not-for-profit organized in DC. In Maryland, if your income from contributions is at least $750,000, an audit is required. But if it's between $300,000 and $750,000, then a review is required. In Virginia, an audit might be required if your revenue is over $1 million, and what that literally means, and that's right from the statute for Virginia, is they have the right to request an audit. So the way that they would connect those dots is, if you're a not-for-profit required to file a Form 990, and for whatever reason, someone with the Commonwealth of Virginia sees something with, say, with a 990, and you have over $1 million of revenue, they could request your organization to undergo an audit. So they have the potential to request that. But other than that, if the revenue is between $750,000 and $1 million, then a review is required. Okay, so just for the information of everyone's benefit, those situations, just based on where you're organized as a not-for-profit organization, that could subject you to an audit. Now, what are some other things that could subject you to an audit? If you are a not-for-profit organization that expends more than $750,000 in federal funds in your reporting year, so if you're a calendar year organization, your year end is December 31st, if during that year you expend more than $750,000 in federal funding, then you're subject to special audit requirements, what's known as a single audit. And that is a higher level of even a basic financial statement audit. You might have a contract with the state or local government. And in order to do certain work with that, if you're doing collaborative work with that state or local government, they may require you as part of like a contract with them to undergo an audit during the period that you're engaged in that contract. You may have a contribution from a foundation as part of your annual reporting with them. They want you to undergo a financial statement audit in addition to whatever reporting they may be looking for with regards to the contribution agreement that you have with them. And then if you have debt with a bank, it is pretty common that the bank is as part of the various covenants that you have with them relative to your debt agreements, are going to ask for you to undergo an audit. So, if you're currently not having an audit and you fall into one of these buckets in terms of how you're receiving support. So if you have a federal financial assistance agreement, and the amount of that federal award that you have is more than $750,000, it'd be a good idea just to double check that you haven't had expenditures at a level that would subject you to an audit. If you have a charitable contribution agreement, making sure someone in the organization has double checked the terms of the agreement to make sure that part of the required reporting isn't that you would be undergoing an audit. And again, looking at the covenant terms in your debt agreements to make sure that isn't a requirement. I will say it's not uncommon that we see situations where just because, say, the bank hasn't reached out to you asking for your audit and you have debt, but there's terms in your covenants that say you should have an audit. Just because the bank hasn't asked you for it doesn't mean that you're not required to have it. And if they catch up at some point and ask for that, or if a funder catches up in their reporting and says, hey, you're 3 into our contribution support arrangement, and you're supposed to have an audit each year of that pledge period. And so what happened to the first year? It's uncommon that we see situations like that where that just gets missed and falls through the cracks, but it doesn't mean that they don't have the ability to ask for that. So just keep that in mind, that those are things that just might be in terms that you have, especially if you aren't currently undergoing an audit where it may be required. So when it comes to those situations, though, especially when you're dealing with funders, you don't have necessarily in practice a lot of leeway with, say, a bank, but maybe with a foundation donor. In the terms they may ask for an audit, it's not, we definitely understand that there are times where audits can be expensive, especially if it's not something that you ordinarily undergo. And maybe it's worth having that conversation with the donor on, is there something that we could provide you that would suffice for what you're looking for from a reporting standpoint, as opposed to having to undergo an audit. So having that open line of communication with funders can sometimes help alleviate some of the cost burden related to an audit. So how often should you have an audit? We've talked about some of the things that might force your hand to have an audit, but if, say, you don't have federal expenditures more than $750,000, or you don't have a debt covenant requirement that makes it so that you have to have an audit, and you're just operating as an organization, and you've decided that you want to have an audit because, from a due diligence standpoint, you just want to do that. How often should you do that? And there's no easy answer to that question. So I say here it depends. But I think it's important to think about who are the stakeholders for your not-for-profit organization. If you are an organization that isn't, say, you're supported by something like an endowment, okay, and you've got kind of a base of financial support that you're able to draw on the endowment on an annual basis to, say, cover your operating expenses. And there's that understanding, say, with the board that, the audit is really for the purpose of just information to the board, and the primary stakeholders are basically the board, and they want to get comfort that the spending of the endowment is happening in accordance with some, in a policy that's been set up. That stakeholder, maybe you talk to them about, is this really necessary? Is this the right use of the organization's resources? But the stakeholder may be the fact that a lot of your support comes from third-party donors, and perhaps you want to be able to elevate the types of donors that you want to reach out to, and undergoing an audit in order to elevate who you could be able to reach out to in order to obtain additional support might, going through that on an annual basis might help you get to a level of just internal discipline to make sure the numbers are shored up each year, and you go through a process to get that all buttoned down so that you can always be in a position to be responsive to donor requests that require an audit. And we talked about federal contracts and things like that that might drive that, but just from the governance policy, it may ask for an audit, say, every other year. So the bylaws might speak to that. It just might simply say, in accordance with the bylaws and of this organization, the organization should undergo an audit every other year. So there are a lot of things to think about, and it really comes back to who are the stakeholders. I would say if you get into the process, though, and this is just, has nothing to do with what benefits me as an auditor or anything like that. I think if you were to get into the business of having an audit, wanting to have an audit done, and you don't otherwise have a requirement to have it done, but you want to go through an audit process, the best frequency to do that, I would say, would be on an annual basis. Okay, most financial statements, just in kind of the marketplace and things like that, the way people look at financial statements and think about how to look at an organization to get some comfort on how to rely on financial statements, it's looked at through a 1 year period for an organization. And so if you're going to go through that process of having an audit, I would say think about just getting into the habit of doing it on the annual basis. Another reason that an annual audit is helpful is because one of the aspects of an audit is that it involves making sure that the beginning net assets of an organization are reliable. So you think about net assets as like equity of the organization, of a not-for-profit organization. And one of the things the auditor has to do is make sure that they're at the right starting point. And so if you go and do something like, say, have an audit done every 3 years, and then the auditor comes in and has to audit 1 year, one of the things they're going to have to do is perform procedures to make sure that where they're starting at for that year, the numbers make sense. And that's going to involve them having to go back into prior years and do work to roll forward the numbers to make sure that they're comfortable that where the numbers start at are reliable. But if you're having an audit done every year, they've already dealt with that. An auditor's already dealt with the prior year numbers, doesn't have to do things to get comfortable with that. So that's one aspect of, in terms of keeping costs of an audit, it's at least stable. That is helpful in terms of having an audit done at least annually. So that would be, what my advice would be in terms of how to think about how frequently should you have an audit. But I certainly don't think there's benefit to, say, doing something quarterly like a public company would need to have done, do like a quarterly filing. I don't really see there's value in that, or every 6 months, something like that. If you're at that point where you're doing something more often than within a year, that's really at the decision of the organization itself and whatever objectives it may have, but is not something I would say is necessary. So, you've got your decision on you need to have an audit, you're moving forward with that. It's important to, again, think about that and, the theme of what we're talking about today, that, and actually, before I get going on this slide, I think it's a good opportunity to, what I'll do is I'll actually take a question. And
yes,
then,
there is a question in the chat for you,
yeah.
Chris.
And then I think we'll be at our break point, and I think it'll be a good pause point. Okay, so question in the chat: how do auditors determine the cost of an audit? Estimates for audit for organizations between 1 to 2 million. So, and I'm assuming that 1 to 2 million is like someone's annual revenue number, more or less.
Yes.
Okay. So here's where, you'll probably hate me because I'm going to sound like I'm avoiding the question.
Don't do that.
How much an organization's revenue is, I can't say that there's like a correlation between that versus how much an audit should cost. I think that other question that you have in terms of how do auditors determine the cost of an audit, that's a fair question. What should be happening, I would say usually what happens in an audit process in terms of going about coming up with a cost is there's an organization puts out an RFP or, sends something out, a notice that they, either want to have an audit done or they're looking to switch auditor or something like that. And they lay out what it is they're looking for in an auditor. And some of that might entail that they know they've had an issue with a certain type of transaction in the past, and they want an auditor who has certain level of experience with that type of transaction. So that might take you to a firm that can demonstrate a certain level of expertise and specialty in that type of activity of a not-for-profit organization. Depending on when the organization is looking to have an audit done relative to, say, their reporting period ends, that could determine how they come up with the pricing. I'll continue this question quickly when we come back, but I know we're at our break point, so I'm going to pause for a second, but I promise you, Tony, that I'll come back and finish answering this question. And I don't know, Kristen, if you want to kind of facilitate the transition point, or?
Well, maybe we could just check, is anyone leaving at 11 o'clock or is everyone staying? Because we may not need the break right now. Great,
Okay.
so staying. So if anyone is leaving, okay, Tyler, thank you.
Thank you for coming, Tyler. We'll look forward to seeing you next time.
Thank you so much. See you all later. Well, I'm going to leave at 11, so I'll be here at 11 because this is super helpful.
Okay, great.
Right.
Well, it seems like most people are staying, so maybe we can just continue.
Okay, sure. We'll continue on. So Tony, back to the question. So let's say you're a county, your organization, and you're looking to have your audit done in February, and you don't put out a request for that until after Thanksgiving of the prior year. First of all, your options as to who you're going to be able to work with, that shrinks considerably because most accounting firms, the period of January through April, around that time is kind of their busy season. And so, that limits who you even have options with. And then firms are gonna, if you need it sooner rather than later, there's a premium to that, that they're likely going to charge. And that can affect the cost of the audit. And so, there are factors like that go into that. If you need to have work done in conjunction with a federal program, that's going to affect the cost of the audit. But certainly what we see in RFPs and what we understand is that, you may request, can you just lay out, for instance, how many hours you think it's going to take to do the audit. And what organizations may do is they obtain bids from different firms, is kind of look at the number of estimated hours and compare that to the fee that's being quoted, and then compare, they're essentially charging me a rate of a certain number of dollars per like average hour to do the audit, and then comparing essentially what that average hourly rate is. And you can get some insight into how the pricing structure is. And then, so if you see like one firm, hey, your charge here is about $250 per hour, but I have 5 other firms where the average charge is, $150 per hour. Can you explain to me where your thought process is and how you're pricing the audit? So those are the kind of questions that you can maybe think about when you're looking at various price quotes and how an auditor may determine the pricing. But each firm has its own cost structure, their own billable rate structure, and that drives how pricing works. And so it's not easy to say exactly how much, the question of how much should an audit cost, it really isn't an easy question. But those are some things that you can think about as to what drives how pricing works for an audit. Sure. Okay, so going back to that team aspect of an audit, I think the easiest way to think about this, and this is certainly like an idealistic way of looking at the audit cycle, or the wheel of responsibility, okay, is that there are 4 key parties involved in an audit. And when I say ideal, I know there are a lot of organizations that have limited staff, and the idea of staff versus management could be one and the same, right? I get that. And so in talking from the perspective of an ideal scenario, even if it is a small staff, even if there is, say, like an executive director, and maybe there is another staff who helps with development type activities. So there is a bit of a distinction between, who's really responsible day to day for fulfilling the vision of the mission of the organization versus who helps to support that, the staff. Okay. So there's staff, management, board, and the auditor. Okay. First, I want to talk about who answers to who. Okay. So in this kind of ideal situation, the auditor is accountable to the board. The board is charged with overseeing the ongoing ability of an organization to fulfill its mission. And they are responsible, therefore, for appointing the head officer to do that. So whether that's the executive director, okay? So the auditor answers to the board, because part of the board's fiduciary responsibility is to make sure that they can stand on the fact that the not-for-profit that they're responsible for is servicing the public, okay, in accordance with its mission, that the public's not being misled. And audit is one of those ways that that can be done. And so, the auditor answers to the board. The board's accountable to the organization. Management's in the middle, right? They have to deal with the board's questions and needs and expectations, one of which is having to facilitate an audit, right? So management's got to be accountable to the board, and they're also accountable to the auditor to get the audit done. And then the staff is accountable to management. Management is dictating to staff what they should be prioritizing, what their focus should be. So everyone's got to be on the same page about these expectations and responsibilities, all right? Because you can't really have that team aspect of things unless everyone's on the same page about who's responsible for what their role is, okay? But an auditor has standards they have to follow. And so it's important that as an organization, you have clarity from your auditor as to what the expectations are of you. What is the timing expectation of what they want to do? What is the information that they are going to be requesting from you? What is the scope of the audit they're looking at this year? Was there some kind of significant thing that happened with the organization this year that they want to be able to take a look at more closely, and therefore, give you a heads up as to maybe that they want to look at that and give you some time to make sure that you prepare for that adequately. So the auditor really is guiding the process of what the audit process is going to look like and what the objectives are, okay? Management is then facilitating the implementation of that and working with staff to communicate, what that timing looks like, what their normal roles and responsibilities are, in conjunction with that additional responsibility to take on the audit tasks and what information they need to have ready for the auditor. Hopefully a lot of that is stuff that you already have in your day-to-day, and it's just kind of arranging that and making sure it's in a place that the auditor has access to. But that communication and coordination between management and staff is so critical, so that staff don't get frustrated, and management can answer questions to the board about where things are at with the audit, so on and so forth. And, as a staff, it's important that you're going to be, that frontline person with the auditor. You're the one who's going to, you give them the information, then they ask you questions back about, hey, we need these 10 invoices, we only got 9. We need the other one. We have this question about this other invoice. But in talking through the timeline, are you getting those questions? Is your staff getting those questions from the auditor in a timing that everyone agreed upon that would happen? So, we laid out a calendar for the audit. We said it was going to be these 2 weeks in February, and the auditor would provide questions after the first week, and the organization would respond with questions by the end of the second week, so the auditor could complete its field work. But the staff doesn't hear questions from the auditor on what they got until the third week. But maybe you as management don't know that, right? And so, but it's important that staff, and so you have tasks that the staff are now needing to do for the day-to-day of the organization, and they're starting to feel overwhelmed because they're still dealing with the audit, but maybe you didn't know that as management because they didn't communicate that. So making sure your staff understands that it's important that they keep that line of communication open about where things are with the auditor. And so, going back to that wheel of response and that kind of cycle of coordination and communication, it's important to think about things like setting up a meeting with the auditor to talk about where things are at, maybe after that first week. Do you have everything you need? So that when you have to report back to the board about where things are at the audit, you as management have a clear picture of that. Or talk to the auditor about, hey, we talked about you would communicate questions by the end of the first week, and we haven't heard anything. So there's this collaboration that, does need to happen. I call it team, and I want to be careful when I say team because, certainly the auditor has to be independent and they can't cross a line in terms of coming to conclusions, but they are part of the team effort to get through an audit, issue an opinion, get through that process and move on so that the organization can move on with their day-to-day. But, it's important to think about it from this standpoint. There are a lot of people getting pulled in a lot of different directions. And the most important aspect of this is open communication and just thinking about, how are you working with your staff? Are the lines of communication open? Do they feel empowered to come to you and say, hey, I thought I was going to get these questions 2 weeks ago. I'm getting them now. I need more time to finish this project I have that, I was supposed to get through at the end of this week. Or maybe can we meet with the auditors and can you advocate on my behalf on why it's disruptive for what I have to do right now in terms of them being late. So just making sure that you're aware of the roles that everyone has to play is very important. But, I do want to lay out, I also think it's helpful to just know who's accountable to who and who's answering to who, just so that everyone's on the same page about, why and how certain people are getting pulled and functions in different directions. But so responsibilities, but you got to start this process, right? So selecting the firm. So who's responsible? Again, I talk in a lot of idealistic situations just because I think it's just relatable in terms of if something was working in an ideal manner, how would that process happen? So if you go back to who's responsible for what, the board's responsible for that fiduciary aspect of overseeing the organization, right? So the board should have some involvement in selecting the auditor, whether that's being involved in reviewing proposals, if they delegate that responsibility to management, at least management's presenting who they met with and interviewed with and getting buy-in from the board, because again, the auditor is answering to the board, okay? But being clear about how does the board want to be involved in that process, all right? And so when you see things like audit committee, maybe your organization doesn't have an audit committee, that's fine. Just think of this equivalent to a board. Everyone's got a board, so think about board involvement. Now, again, whoever is accountable for the audit process, they should be familiar with the scope of that, what the auditor is going to be looking at, what does the engagement letter say in terms of terms and expectations and fees and how additional fees work, and just making sure that they're aware of those things in terms of who's responsible for implementing the audit. They need to be in the loop on those kinds of expectations from the auditor. So when you go about selecting the firm, it is important, I would say practically speaking, when you're looking at a firm with experience, it's most important that you're working with a firm that does work with not-for-profit organizations. You don't want to send proposals to or solicit bids from accounting firms that don't work with not-for-profit organizations. At a baseline, make sure that you're dealing with a firm that works with not-for-profit organizations, because there is a difference in terms of how things are reported and accounted for, and that is important. Make sure once you select the auditor that you meet with them before the audit starts. Ideally, you've laid out kind of a plan for how you want to go about starting the audit, when you want that to happen, and you just set up a time to meet and talk about expectations, what they're going to be asking for, what the timing's looking like for when they want to do the work. In terms of being licensed in your state, that's a kind of practical matter, but it's not uncommon. This day and age, there's a lot of kind of state overlap in terms of reciprocity and things like that. So especially if you're working with a firm that's based in the DC region, DC, Maryland, Virginia region, they're likely going to have the ability to work with an organization in any of those three localities. A good thing to look at when you're pursuing an auditor is look at peer organizations. And I'll talk about this a little bit later in the references about how to leverage things like GuideStar to help with looking at peer organizations to get insight into who are the types of auditors that audit firms in the DC area. What are the names of those firms? Any auditor, you should be able to ask them. They should lay this out in anything that they present to you from a proposal standpoint, but you should definitely be able to ask them and get a clear answer about, what does your firm do to make sure there isn't a conflict of interest with my organization? Because again, the worst thing that can happen to you is that something happens that you didn't know about, where the auditor actually isn't independent, and they find that out during the audit process, and they're no longer even able to issue an opinion. But any firm should be able to tell you what their process is for identifying conflicts of interest and communicating that to you, and making sure they have a process to hedge any issues with that. So again, preparing for the audit, the key document in any audit arrangement is the engagement letter that lays out what the audit scope is going to be, what periods they're going to look at, who's responsible for what. It should be clear there. If they want staff to be involved with helping with preparing confirmations, I think that's one area that there's sometimes miscommunication about. Are staff at an organization going to prepare confirmations, or is the auditor going to prepare confirmations? Then someone at management just signs them. So having that clarity in an engagement letter is important. Clarity about what the fee structure is. So you ideally would have gotten that through the proposal process, but the thing you want to pay attention to and ask very specific questions about is, because the way it usually works today is you're presented kind of a fixed fee, and that says, that fee is going to cover the audit for this year, but there might be something that says if there's additional work outside of the scope of the engagement, there might be additional billings. Talk to the auditor about, give me an example of something that might cause you to charge more than this fee that you're quoting, and make sure that you get a clearer sense of that. Examples of situations where auditors may talk to you about more fees is if you had an agreed upon timeline and the information wasn't ready, or you talked about what types of things were going to be ready at a certain time and it wasn't, and they then have to shift their timing for doing the work. They may talk to you about that. If they ask you, have you created any new entities during the year, or there are new affiliates or something like that, and you say no, but then they start looking at an agreement and it turns out there's a new subsidiary that was created that affects the audit work, and that's additional work that wasn't accounted for. That's the kind of situation where an auditor may come back to you and talk about needing to revisit the fees. But anything like that, you should definitely feel empowered in that it's totally fair to ask the auditor, what are the types of things that could result in additional fees, and that there's an understanding that additional fees won't be billed until it's discussed with you about why they're necessary and where they're coming from, and what's causing that. Again, start date, completion date of the audit. What does that look like in terms of being able to get your arms around, when you're going to be able to facilitate the audit? Making sure your records are up to date, accurate, and organized. I think the key thing here is that what you should get from the auditor is a list of what they want for the audit. Okay, we call it a PBC list, a provided by client list. But you should be able to get something from the audit that lays out what they are going to ask for in terms of like a trial balance, schedules, what periods they want that for, what level of detail they would like to have that for. And then that will help you, maybe that first year you go through an audit, you have to create some of this stuff to help with the audit process, but then you'll have a sense of what they're looking for. And then it's about creating a framework inside your organization to facilitate, okay, we know the auditor is going to ask for these things. Do we have these things ready? How much time did it take to prepare that information last year? Can we back into, amount of time to give to prepare that information for this year's audit so that it's ready to go and we're not scrambling to pull that information together for the auditor? But also feel like you can talk to your auditor about, you're asking for this for number 13, can you just maybe explain what you're looking for? Because sometimes, it's easiest for an auditor to use as broad a request as possible, but maybe that's not what you call that thing in your organization. And maybe if you talk through what they're asking for, you might actually have what they're looking for. You just call it something else. So it's really important that that list of requested items that they are asking for, if there's something that doesn't make sense to you, or it isn't quite clear, that you feel like you can ask them, hey, what exactly are you looking for here? Oh yeah, well, we do this with this work. And you'd be surprised that oftentimes, you have information that the auditor is looking for, just you call it two different things. So just make sure you have that discussion with them and talk through that. And then again, that communication is just really important. Make sure you have that planning meeting with the auditor, talk through the timeline, that they're on the same page about, do they have what they need to get started? Are they going to be able to work through, they still have the same staffing resources that they were expecting to have during the time period? There's not going to be any issues with that. Talking through that with the auditor before the audit starts to make sure everything kicks off as smoothly as possible. Okay, so you get through the audit. Woo, everything was.
One question is in the chat, and I'm wondering, you may have answered this for Ron, but Ron, do you want to go ahead and answer your question? Ask your question.
Sure, thank you. And Chris, this is great information. Thank you so much. When you talked about managing the audit and the team, I just want to know if there's some playbook or template or whatever to get the team prepared for the audit, the questions they may ask, so that as much prep work can go in for the team itself before the audit actually is conducted. True transparency, that's our first audit. So we can get prepared, try to, hopefully be as successful as possible with it. So.
It's a good question, Ron. The thing I would say is because every organization is different, and depending on when, so you for yourself saying you're going through your first audit, the level of what the auditor is going to ask for is going to be more than what would be if it was ongoing, especially in terms of getting, say, documentation about your organization's just structure, so like bylaws and articles of incorporation, various contracts, like a lease agreement, if you have any, things like that. They're going to ask for that in the first year, aside from just the support for the financial information. But that's why I think the best template is that list of things that they want for your audit, and then saying, let's meet and talk about this. And I think, the firm that you work with should be willing to understand that if you're going through your first audit, that you need some guidance. And that you're not used to this, and that it's important that it's not assumed that it's sufficient to just email you a list of request items, and that everything about what it takes, what they're asking for and what it takes. And so the best template is that, hey, we're looking forward to the audit. Can you, as soon as possible, provide us with what you think you're going to need for our audit, because we'd like to review it and then set up a time with you to talk through questions that we have about what you're looking for. And that will help tease out things like, we don't have that right now. So can you just talk us through what it is that you're looking for that? Because we may need some time to pull that together. And do you have a template for something like that we can use? to help us pull that information together. But that's your best playbook, is what does the auditor want? And then set aside the time to meet with them. And try to, again, I talk in a lot of ideal terms, and one thing I haven't been real clear about is, especially if you haven't undergone an audit for the first time, and let's just talk about a general scenario. Let's say you're a calendar year organization. I think it's reasonable to expect that in order to manage pricing as much as possible and getting it done as efficiently as possible, that you be open to the audit not starting as late as May of the end of your calendar year end, okay? And it taking as long as potentially around the end of September into October to finish that first audit, okay? With an ultimate goal trying to be having that audit done really by, for a calendar year organization, by the time your 990 is due, which is November 15th for an organization that files an extension, which is fine. It's not a red flag with the IRS, you file an extension. Most organizations file extensions, that's not a problem. But that's kind of the window you would want to look at for trying to get through a first audit. Is pricing is going to be more favorable for you after April or May. And it could take as long as from May to end of September into October potentially to get it done, because you're going to get that list. Your staff, you may have vacation, your staff may have vacation, the auditor, it's going to have some vacation pop up here and there, and that you want to lay down as realistic a timeline as possible, and give yourself as much time as possible to hit that timeline, and to have the ability to do things like prepare those schedules that they may need, or work with them to pivot and provide additional information that they need. But think about it from that standpoint. Get that list and think about it as almost like a year-long process, especially in that first year, to facilitate as efficient and stress-free a process as possible.
Chris, you just used the term schedules. And I just want to share real quickly. The first time I went through an audit, the auditor asked schedules request. And I thought that meant he wanted on my calendar. No, he was asking for schedules, which is specific financial information that needs to be in a certain, I now know what that means. But the first time I went through an audit, there were all kinds of terms that kept getting thrown around. And we weren't as efficient as we might have been just because we weren't speaking the same language. So that's why it's so important for you to get with, whenever you get a piece of paper from your auditor, get back with them right away. And there's no such thing as a dumb question. Make sure that you're on the same page.
Thank you so much. Thanks, Chris. Really appreciate it.
Sure.
Gretchen, thank you for sharing that story, because I think sometimes we forget how much we don't know. And a first audit, I think, for anyone can be a very humbling experience for just that reason. Something like they ask for schedules, and you, who I think people know is, pretty experienced nonprofit person, thought they wanted that Microsoft Outlook share
on my calendar.
Yeah, and I oftentimes say to people, and had the pleasure of working with Chris at the outset around some of what I thought were important questions in putting this together. And they were born a lot out of my naivete when I did my first audit, and it's part of why I learned to love audits, because I was humbled, I was frequently embarrassed, but ultimately I felt so empowered afterwards. So, and then Gretchen, do you want to read Shelley's question since we're talking? And then I think, quite frankly, that people might appreciate a bio break after this.
Shelley, do you want to ask your question, or would you like us to?
I'm happy to. My question is about COVID. And there have been different changes to how we are handling the mail and our accounting systems, because many people have been working from home at different times, which we keep thinking is a temporary, we'll just have this person be the substitute to that. And I guess as I'm looking at I'm gonna have an audit, my second audit this summer. As I'm preparing for that audit, I'm just wondering if we should just formalize that language in the financial, management systems, or what would you recommend?
Yes, so you can approach this various ways, but what I would say conceptually is that your auditor should be asking you, due to COVID, can you explain to us if there have been any changes in your internal controls? And so, I'm using the term here, but the easiest way to think about that is the way that you do things, because of things like working remotely. They should ask that question, because part of our responsibility is to understand how you do things in order to inform how we approach our audit. And there should absolutely be questions to you about the implications of COVID relative to that. And absolutely, at this point, since we're going into year 3, a lot of, and not even just because we thought we were going to go back to the office, but the fact that, COVID, at the end of the day, it has permanently changed how organizations feel from a comfort standpoint of just, being realistic about the fact that what's better going forward is to have some kind of at least hybrid work model, right? And moving forward from this idea that everyone's going to be back in the office every day on this normal 9 to 5 schedule. And I think it's important that organizations just accept that. And so then what is the way that we can keep our business moving with that acceptance in this remote environment? And so how do I, if we've done things like shifted to an electronic bill paying outsourced service provider, and that therefore someone's not physically signing off on a list of checks that they reviewed anymore, but they're going into a system and clicking a button and they're electronically signing off on a review of a check. And so that's a change in our process as to how checks have been authorized. You're probably not going to stop doing that, even if you go back into an office, because it's just more efficient, right? And so you should just formalize that in your process. Now, that's one way, update your documentation, but I know that can be cumbersome. I think another thing that's important, another way you could look at this that's important, is an auditor is really focused on, in terms of understanding processes, how does money go out the door and how does money come in the door? And what are the controls around that? And those two areas are also areas that a board should have a good understanding of. Who's responsible for depositing money, who's responsible for allowing money to leave the bank account. And so if maybe it's a little bit cumbersome right now to go through your documents and policies and procedures step by step, but there are key frameworks that have changed. We've implemented electronic bill paying system, and now the executive director goes on to the service and approves payments. That's something that's going to be communicated to the board. All right, that this is a change in a change in a key process that we do. So the board is aware and on the same page about this change into how assets or financial.
Okay. But just a follow up on the example that you gave, where the executive director is signing a check request electronically instead of just like putting in the initials instead of being there. I mean, I'm printing them out and making sure that they're initialing it when they get into the office so the files are straight. But that's an example of, do you change the system? Would that be enough of a system, that electronic initialing for the auditor?
Here's what I always say, especially when it comes to electronic systems, is that you want to make sure you control the ability to access the data whenever you need to access the data. And that is the most important concept to keep in mind when you're, as organizations move to electronic systems, is if you need to get to that information to prove something, do you have the ability to control are you able to control your ability to get to that information when you need to, and however you need to? And so if that requires you, take a look at the record retention policy of the third-party vendor. If they purge information after 1 year and you're going to need to get to that after 1 year, you need to have a method of downloading that, making PDF printouts of that to retain it on a server you control. Things like that you want to think about. But the key thing you want to think about is, can I control access to the information that is hosted by somebody else if I need to get to it?
Perfect. So I think, why don't we take 5 minutes, because there's still more gold to come. Want to make sure everybody takes it in. So, and also Chris probably could stand a drink of water or something. So see everybody back in 5 minutes at 11:27.
Yeah, just turn off your camera and your mute and put yourself on mute if you're already on. And then come back in 5 minutes. You don't need to drop off and reload. See you soon.
I think Gretchen may have gotten a little hold up, but why don't we, let me take a look down my screen. I want us to, okay, very good.
I
A
should
lot of
continue.
people are muted and have their cameras off, but if you just want to either show some way through using your reactions or turn your camera on real quick, or by putting something in the chat that you're back, just give us a sign. Thanks, Charlene. Appreciate that. Thanks, Yanira. Hi, Shelley.
Yep.
All right. Okay. And there's Josephine. Okay. So we got a good group back. Let's roll. And there's Tony. All right.
Okay, so welcome back. We're going to transition to after the audit. So when I say after the audit, I'm talking about, the field work is done from the auditor, but this is before, say, for instance, and again, going back to those ideal scenarios, is what would happen is the auditor would present the results of the audit to say, if there's a subset of the board, such as a finance or audit committee that the auditor is reporting to, they would present that to that group before the audit report is actually finalized, and communicate things such as if there were any issues that came up during the audit. Now, what I would say is that as a management or what have you, staff, you should meet with the auditor after they have finished their field work to have that same conversation. It is our philosophy that because the board is accountable to the organization, but you as management are charged with facilitating the audit, there isn't anything that we should be saying to the board that would be a surprise to you as management, okay? And so it's not fair, first of all, and you should be able to be in a position to answer to questions that might come from the board based on the audit. And I don't say this as a scare to be scary or anything like that, but if you just go back to that wheel of responsibility, you're reporting back to the board in terms of the audit results, as well as the auditor and their audit process. It's only fair that you have that conversation with the auditor first. So ask the auditor if you can meet with them after they're done their field work before they present anything to a board or a finance committee, and make sure that you're on the same page about the results of the audit and things like that, and questions or issues that may have come up. So one of those things that should be discussed is if they have identified what the technical term would be as a deficiency in your internal controls. Now, under professional standards, depending on it's auditor's judgment in terms of how these decisions are made, but there are basically levels of deficiencies in internal controls. One being a material weakness, that's the highest, or you could say like the worst type of deficiency in internal control. And another is called a significant deficiency, which is lower in level. And then there are just other maybe recommendations, things like that. But make sure you're on the same page with your auditor about if they've identified anything like that. And so again, the key term here is just deficiencies in internal control. If you ask them that, they will know exactly what you're asking about and should be able to communicate to you if they feel like they've identified anything like that, and then have recommendations for how to resolve anything like that. So make sure you have this conversation before anything's presented to the board so that you can answer to that if necessary. Make sure you get a copy of the draft financial statement to review, and make sure you ask any questions that you might have if the auditor is preparing that on your behalf, to make sure you agree with everything that's in there, because ultimately you're responsible for those financial statements. So make sure you're able to review that. Make sure you ask your auditor if there's anything that they recommend, which should come out of that process. And what we'll do usually with clients is, even after the presentation to the board, we'll have a debrief back with management about how the audit went in general, and talk about things like, it took us longer than we thought to prepare this schedule. We need a little bit more time, or is there a way that we could, streamline that process next year? Or, the timing of the audit, we really thought it would work well, but it actually ends up running a little bit too close to one of our main fundraising events. And so there was a strain on our staff that we weren't really anticipating. And so can we do something about the timeline of the audit next year? Have that kind of debrief and take notes along the way with the audit process, so that you can have that conversation with your auditor about what worked well, what didn't, and what things can be changed or looked at differently going forward. So again, communication, it's all about communication. All right. So quickly, again, these are just technical definitions. I don't want you to get too, they're here for reference, just so you know, when they're presented to you, the auditor is there's a very standard way that this is written from the auditor's standpoint. And these are the technical, this is the technical wording of what you'll see in internal control letter. The thing that matters and is relevant to you is what are the comments, and just so make sure that you get them from your auditor, and that you understand that you agree where they're coming from in terms of is the thing that they're communicating, is that actually the right perspective? They may say, like, during our audit, we noted that the organization doesn't have an ability to make sure that checks are reviewed before they're processed. And you're like, what? No, we have this whole folder of reviewed and approved invoices. And so maybe it was just a miscommunication about the auditor didn't get it during the audit process. So just make sure you're reviewing those comments, and that they make sense to you, and that everyone has the right understanding of what was going on. And again, so that those are, technical things that they may communicate to you, but again, ask if there's anything they just noticed from an operational standpoint that, through their process of going through the audit, or the recommendations they may have in terms of how to improve, what you're doing. Is there anything they're seeing from their process that could be improved by technology that might be worth exploring? Certainly there's a cost to that, but maybe if there's a benefit as well that could reduce costs in another aspect, it might be worth investing in that. So just ask your auditor if there are things that they're seeing in the industry, or with their other clients similar to yours that might improve your processes and how you go about doing things. Certainly ask them if there's anything from an accounting standpoint that they think might be impactful to the audit going forward. Technically, as an organization, it's your responsibility to have someone who can kind of know understand accounting requirements and how things should be recorded and stay up to date on what's going on. But I understand it's not always practical to either have that person or to interpret, how it might affect your organization. So ask your auditor for their input on if there's something that they see coming down the road that might affect how they need to record something. A big thing that's going to be happening for all organizations, no matter what, in the next year is a change in lease accounting standards. And so that's going to change how all organizations have to go about reflecting how leases are recorded on their books. And so for the easiest way to think about this, for a calendar year organization, that's going to be impactful for 2023. So, that's, if you haven't already had that conversation with your auditor, definitely start to have the conversation. Just make sure that there aren't things they're hoping that you can do to get ready for that. So, just some takeaways to think about in the close of the audit process, and make sure you're talking about with your auditors.
There's a question, Chris.
Oh, okay. I'm sorry.
From Sam. Sam, do you want to go ahead and ask that, or I'm happy to do it, but
I can
if
see
you're-
it. I can go ahead and.
Okay, great.
Should the audit committee just be the finance committee, or who else should be on it? So there's no real formal, there's no real rule about who should be, how the board should go about having someone on it be responsible for overseeing the audit process. We have clients who they have something that's called just the finance committee, but in accordance with the bylaws, the finance committee is responsible for overseeing the audit. We have clients that it's called the audit committee, and so it's one-to-one. Clients who it's called the finance and audit committee. We have clients where it's called the investment committee, and they're responsible for overseeing the audit. So that just really depends on how your organization is structured. If all you have is a finance committee, the only thing I would just say is make sure everyone's on the same page about who, regardless of what the committee's called, or if it's just the board that does the oversight, just make sure everyone's on the same page about who's responsible for overseeing the audit process. Like whose responsibilities that fall under. Is it, if there is no separate audit committee, I'm not saying that the organization has to create an audit committee in order to have a subcommittee that oversees the audit, but just maybe the charter for the finance committee can be modified to say that the finance committee is also responsible for overseeing the audit. But it really just comes down to how the organization is structured and what they think makes the most sense. Because some organizations are the board's small, and so the finance committee, they can create a separate audit committee, but it's going to consist of the same people as the finance committee, if those are the same people who have kind of the relevant skills from the board, right? So then you just maybe call it the finance and audit committee, but don't get caught up in that as much as just making sure there's clear communication about who's responsible at the board level for overseeing the audit. We talked about how to go about dealing with evaluating communicated deficiencies. So again, just some reference items. So I want to close really quick on just some things to think about, and this is very focused on from the perspective of the impact of the pandemic on organizations. We talked about, certainly from an internal control standpoint, how to think about that, and that you should be getting questions from your auditor about changes in your internal controls that might be in response to the pandemic, particularly as it relates to working remotely. But in terms of organizations that receive federal awards, it's important that you're aware of just there's been so much movement and fluidity with the various relief programs and what have you, and organizations who have previously maybe never received a federal award because they received some federal support dollars to help with the pandemic, and that came to them in the form of a federal award. That has just created a whole different element of responsibility to dealing with federal contracts and agreements. And so I just want to touch on some things to just think about as an organization who might be dealing with federal awards, or you may be, but you don't know, and some things to think about from that standpoint. So first, there's a thing that's called the compliance supplement. And so what that is it's a document that's issued by the Office of Management and Budget. It's usually one version issued each year. It usually would come out around July of each year. And in the last 2 years with the pandemic, they've had to issue multiple addendums to that compliance supplement to deal with the ongoing implementation of various federal programs related to the pandemic. And so But it's important to be aware that this exists, because this sets the expectation for which federal programs are actually subject potentially to having to undergo a federal audit. And so that is kind of the guide that you want to follow, is the compliance supplement. And that's going to have all of the federal programs listed that will be subject to a single audit. And you can get that from the Office of Management and Budget's website. If you Google, the easiest way to find this is if you Google federal compliance supplement, it will take you to some page at whitehouse.gov that will have links to all the compliance supplements. It's a pretty much can't miss Google search. And that's the easiest way to get it and know that you have the most current version. And always look at the most current versions of 2021 version, okay? But again, that'll list all the programs. There will also be communication about extensions related to federal audits. So again, to level set, the easiest way to think about this is that if you're subject to a federal audit, the due date is generally 9 months after your year end that you have to have a federal audit completed. Because of the pandemic, those due dates have continuously being extended, with the most current extension being for basically fiscal years that end after June 30th and end up to June 30th of 2021. The due date more or less has been extended an additional 6 months after that 9-month period. So you basically, if you're up through a June 30th, 2021 year end, you have essentially 15 months to get a federal audit done, but that continues to move. So just make sure you pay attention to that. And again, that information is best, the most reliable place to get that. In addition to just asking your auditor or your accountant, is that OMB compliance supplement. One thing I want to make clear really quickly here is a question that came up early on under the CARES Act when the various relief programs were coming out, is a PPP loan subject to having to be reported as part of a federal expenditure that would subject an organization to a federal audit? The answer is no. PPP loans are excluded from that assessment. So you can have a PPP loan, but it is not something that, if it's the only kind of federal arrangement that you have, that is not something that needs to be factored for in terms of federal expenditures of federal dollars in terms of having to have a federal audit. But the EIDL program loans are. So if you had an EIDL program loan, those would need to be considered for inclusion in a assessment as to whether or not you have a federal audit requirement. And then subrecipient versus beneficiary implications. What I'm getting at here are a few things. Going back to that comment I made is you may be subject to one, or you may not, but you actually are and you don't know about it. Here's what I want to say about this is it's very important in this, especially this pandemic client, that you are absolutely aware of if you have received, especially support that you know you got because it was designed to help your organization through the pandemic. So here's this grant of whatever to help support the operations of the organization in response to the COVID-19 pandemic. So say you're a Maryland organization, you receive something from like a county, some kind of county grant, and that was identified as COVID support. Make sure you understand whether or not that grant that is actually, that to you have an agreement with, say, a county or local government, or say like a foundation, that the genesis of those dollars isn't actually from a federal program and it's being passed through a state or local conduit or through a foundation conduit, but it's actually sourced from federal dollars. Now, under the law, if that is the case, the entity providing you that support, if they're not otherwise that federal agency, it's supposed to be clear in their agreement that you are being provided money that is being passed through from a federally sourced or like a federal agency. Okay. But even though it's a law, laws are not always followed. And so it may not be clear in your agreement. And so the thing I want to say, just keep in mind is the easiest way to think about this is if you're dealing with anything, especially something that came to you that says it's to support you for helping with getting you through the pandemic, whoever gave it to you, ask them if they can confirm for you that whether or not what they gave you is coming from their own resources or was it part of a federal pass-through program where they then provided a grant to you? And that is going to have a big implication on whether or not you potentially are subject to a federal government audit, because even if you are receiving it as a pass-through entity, you are subject to those federal audit requirements. And it's one of the biggest issues that we deal with is that being missed by organizations. So especially in this current climate, just make sure you ask that question back to the granting entity if it isn't otherwise directly from a federal agency. Okay. Any questions with that? All right. And then here's just a list of the various programs that you'll see in the compliance supplement to help, again, identify those programs that might be related to COVID-19. So in that compliance supplement, you'll see various programs identified as what's called COVID-19 funding. And so you can be pretty assured that anything in the supplement that has been authorized through one of these various acts or programs is going to be considered COVID-19 funding that's subject to a federal audit. So again, if you see the trigger that you want to pay attention to is you get something from, say, like a state agency or a county government, and it says something like the X County of Maryland's American Rescue Plan Act COVID-19 program, that should be a trigger that actually is coming from to X County by way of a federal agency in conjunction with the American Rescue Plan. It should be clear that that's what's happening in the agreement, but if it's not, or if it's ambiguous, definitely make sure to ask that question of who is giving you the money. But this is the list of the various programs. And the key thing with that supplement and its various addendums is that it keeps getting updated. And so you just want to pay attention to new programs as they're added. Okay, so before I go to the resources, I'm going to answer a question. What's the difference? Is a great question. It always comes up. It's one where I always say, I don't make the terms, I just recite them. But what's the difference between an audit and a single audit? So an audit, that's just a regular financial statement audit. You've got, your balance sheet, income statement, cash flows, footnotes. A single audit with a term. So anytime you hear single audit, what you want to think is that's a federal audit. Okay, so that is what is an audit that's being done to test the federal expenditures. Where the term comes from is it was authorized by what was called the Single Audit Act several years ago. And so the Single Audit Act authorized audits performed in accordance with OMB standards. And so they're referred to short name as single audit, and that's where it comes from. But it's not like one audit, which is confusing. I think always confuses people, or it's not just an audit of only the federal programs. Whenever you have to have a single audit, that actually involves both an audit of your regular financial statements and then a separate schedule of your federal expenditures, and that's one combined audit. So good question, but that's the distinction and how you want to think about that.
Yikes.
Yeah, confusing for sure.
Yeah.
And you may, and a lot of you who've been in the space for several years, you've probably heard of an A133 audit. And to this day, that's what a lot of people still refer to it as. That term technically doesn't exist anymore, but it's the term that everyone's familiar with. So if you still hear it, that should be your alert for federal audit. Technically it's called a uniform guidance audit now, but it's fine. Even in our firm, there's still documentation we have where we refer to an A133 audit. So even we haven't updated everything that we have for it, but that is also, if you hear A133, think of that as the same as when you hear single audit, the same exact thing that's being talked about, and probably a term that more of you are familiar with.
And more broadly, the term OMB circulars are now the OMB uniform guidance. Is that right?
Yes, that is the right way. Yes. So there used to be, so A133 was OMB circular A133, which authorized the single audit to be performed in accordance with OMB circular A120, which were the cost principles that organizations had to follow to have a federal audit. But yes, all of that has now been codified under the uniform guidance. So thank you, Gretchen.
And
Terms.
just trying to be
Terms.
really, really transparent and open to people who may not be familiar with governmentese. OMB stands for Office of Management and Budget,
Yes,
which is
absolutely.
the government's accounting firm, if you will, that covers all the federal agencies.
Right.
I'm not sure about other questions, but Chris, could you quickly speak to one, the fraud interview, and two, so you found an auditor, you've worked with them for a few years, you like them. How often should you change, if at all?
Sure. So the thanks, Val, for the question with the fraud interview. So part of an audit requires the auditor to perform inquiries. We call them inquiries, so questions with those who would have a direct impact on the audit. And so under the standards, that would involve key management personnel. And when I say audit, that's not the right term. Individuals who would have key responsibility to the financial reporting of the organization. Okay. And so that could be management personnel, board members. So if there's an audit committee, a member of the audit committee, if there's an internal audit function, someone there, if there's a key accounting staff, someone there. There are standard questions the auditor has to ask in relation to that. One of them being, are you aware of any fraud? Conceptually, other questions around, are you aware of any internal control deficiencies with the organization that might increase the potential for fraud? So an auditor has to perform those inquiries. They will let you know whoever at your organization is responsible for overseeing the audit process. You should ask your auditor, who do you intend to interview as part of your fraud inquiry, so that you just know who they intend to talk to. Those interviews will be one-on-one. There are standard questions. You can ask the auditor if you can see the questions that are going to be asked, but it's not designed to be, this isn't like a criminal investigation. It's just that we are required to ask about awareness of fraud or fraud risk. And I want to say that because there's a distinction, I think, confusion about the fact that audits are not required to and do not report on the auditor's ability to have identified any instance of fraud with an organization. Under basic auditing standards, that's not the responsibility of the auditor to design the audit to find fraud. That's not a requirement. It's not an expectation. The opinion doesn't get to that. What the auditor's responsibility is if they identify, is to ask and perform inquiries related to awareness of fraud risks and try to think about where there could be fraud and design audit procedures around making sure that those risks have been reduced, but they're not required to actually find fraud for an organization. That kind of audit is a special audit that you would pay separately for. And I think there's sometimes confusion about, because an auditor is supposed to report if they did identify any fraud. And so if they say that, sometimes it gets confused with the audit being that the auditor is saying that there's no fraud. And so there's a difference. There's a difference between we didn't identify any fraud versus there is no fraud with your organization. And you had the second question, right, Val?
I'm sorry, yeah. And the second question was about how often you need to
rotation, auditor rotation. Okay, so for not-for-profit organizations and other private businesses, there's no requirement for a rotation of auditors, which is different for public companies. So the answer to that, there's no requirement. There is no general best practice about how often you should switch auditors. What I will say is what organizations will do, some organizations will do, say, like every 5 years, they'll at least do go through an RFP process, just from a governance standpoint, to make sure that they are benchmarking, especially from a pricing standpoint, that it still makes sense that what's being paid for an audit is consistent with what the market is now showing, that they're being fair in terms of service providers and in giving opportunities to the various types of service providers, and going through the RFP process can facilitate that. Something that other organizations might do is ask the firm, we like your firm and we don't have a problem with your current partner or anything like that, but maybe if we could just get a different perspective, would you consider a rotation of the partner on the engagement? And that's something that organizations will ask about, and something that you could consider too. Like, look, we know how this firm works, we like them, and we don't have anything against the current partner, but maybe just to make sure that the company is still engaging with us in a manner where they're really thinking about us and taking us seriously. Maybe we just ask if we could have a different partner to get a different perspective. So something that you could think of, but there's no requirement for rotating firms, and there's no real hard rule about how often you should change auditors. You may be maybe in the bylaws, there might be something like that, but there's no rule or anything like that.
Thank you. So we're getting close to time. We thought we'd have plenty of time, but I think this was so interesting and informative. So did anyone have any last questions before Gretchen closes us out? Well, and also Kristen has some announcements, so.
And Chris has some resources on her final slide.
Yes, and if I could comment on those very quickly.
Mhm.
I promise I'll be very quick. So obviously your accountant or your auditor, make sure you're just picking their brain, talking to them, staying in communication with them. It's a network, especially in the DC region, of various executive directors and whatnot. Talk to your peer organizations. Who are they using? What are the things that their auditors are asking questions about? National Council of Nonprofits, a lot of free resources that you could go to. And everything that you see has an underline on it. That's a link you can click to go right there, just so you know. Guidestar.org. When I was talking earlier about sometimes it's healthy to just try to benchmark yourself against other organizations, see maybe what firms are using, things like that. You can go to guidestar.org and sign up for a free account. And with a free account, you can have access to the prior 3 years of 990s that have been filed by any exempt organization that have been properly filed with the IRS. What happens is they go to the IRS, and once the IRS processes them, they end up on GuideStar. So you can go to GuideStar and you can see prior 3 years of 990s for free for any organization, as well as some general financial information and website links, things like that for any organization. The ICPA, in full transparency, it's a client of CohnReznick. I do not work on that client, but the ICPA sets the standards for accounting and auditing. And so I say there's nothing worse or nothing better than going straight to the horse's mouth about what's expected from an accounting and audit standpoint. They have what's known as a not-for-profit section. What that is, it's about, I think it's like $90 a year, but what it does, it gives you access to things like RFP templates, best practices, bylaw templates, article templates, policies for things like whistleblower, conflict of interest, best practices for how to prepare for an audit, things like that. So it's a wealth of resources. It is pay. And again, I don't get any benefit or doesn't get any benefit if anyone does this, but I have to be honest and say that they are a client of the firm. But again, you're getting it from the standard setters. So that is always a good resource. Here are links to the compliance supplement and the regulations that I talked about before. And then finally, the Financial Accounting Standards Board. So that's a subset that sets standards for accounting. So if there are new things coming down, they're always a good resource to see what's coming down the pike for organizations from an accounting standpoint. So just some resources for you there. And then finally, I'm a resource too. So if you have questions, feel free to reach out and let me know if you have questions about something, but I turn it back over to Gretchen and Kristen.
Just one other question before we go to Gretchen. I know you're not doing this to get new business, Chris, but are you available if someone wants to talk to you about an audit?
Yes, yeah, definitely. My contact information is there. And so feel free to reach out. I will say that I may be slow during this time of year to respond, but I will get back to you. So I just appreciate a little patience with timing. That's all.
Thank you, Chris. We just are so grateful. All of us from Fair Chance want to say a big round of applause for your putting this together on our behalf, for your willingness to do this and be a resource to us. Just really, really helpful. So let me just ask for the 9 of us that are left, if you could just, do you love audits? Just raise your hand. Do you? How are you feeling about audits? Okay. Are we feeling better about audits?
Yes.
We were when we started. That's a
Yes.
fair question, I think. Anybody? Okay. All right. So I again, this is something that is not necessarily fun to sign up for on a Thursday morning, but I'm so glad you all did. I think it was a really great presentation, but also engaged conversation. Thank you for your questions. Thank you for your participation. We do have, some a document somewhere that had a list of auditors that Fair Chance Partners have used, as well as outsourced accountants that Fair Chance Partners have used. We'll see if we can dig that up, and along with this this really, really helpful PowerPoint, I'll get it out to all of you shortly, along with an online survey. Are we going to do that right now, Kristen?
Yes, actually, Chris, could you stop sharing?
Yeah, sure,
and then I
absolutely.
will, no worries. And then I will just share a couple things. That the evaluation link is already in the chat box. I'll put it in again.
Please complete it. Thank you.
Yes. And I do have a couple of announcements for upcoming opportunities. And as soon as I can figure out how to share my screen.
Well, Kristen is doing that. I just want to lift up Val and Kristen for their incredible coordination and leadership of our network services offerings. So Kristen is now going to share with you some of what those are, but I just want to thank both Val and Kristen for their service.
Thank you, Gretchen. So the first one that's in the orange here, we're starting a new capacity building program, which is low barrier. So Tony has already participated in it. It's called ARCH, which stands for the Alumni Resource and Capacity Hub. It's only open to partners who are not currently in a partnership, who've graduated. It's in the pilot phase now. If you're interested, just reach out to me and I can connect you up with it. I will also include information in a follow-up email about that. It will be formally announced in February. This gray one here at the bottom, another thing that you can apply for is the BCG Fellows Program, which is a one-year engagement with management consultants through Boston Consulting Group. And it's a very, it's not as intense as a Fair Chance partnership, but it's very impactful. So it's like, an hour or two every week or two, and they do things like market research, strategic planning, a whole wide range of things. So again, if you're interested, reach out to me. The application is due on Valentine's Day. So we look forward to a Valentine in that form if you want to send us one. And the last two here, these sort of mauve colored ones, these are upcoming Executive Director Learning Community events. The first one, I think everyone will be very excited about. It is unfortunately only for executive directors, but it is self-care for vicarious trauma. It's an online retreat for alumni, and it's 3 hours, 10 to 1 on March 24. I will send more information on that. And then in May, we are going to have a new type of EDLC, which is a hackathon for a really challenging problem that a lot of folks are having who are committed to hiring from their former clients or from the community, because it's especially in these very difficult times, those staff members may need some extra support, just like, even as much as the clients still. And so there are a number of executive directors who are committed to maintaining that, but it's not easy. And so this hackathon will be just a conversation where people can share what they're learning, what's going on, what are some solutions. And so those are, again, I'll send all the information with links in my follow-up email. So I think that's everything. Would love, we'll leave the Zoom open if you want to take a few more minutes to complete this survey while you're still sitting here. We would really appreciate your feedback. And that's everything. So thank you again, Chris. This was truly amazing. And thank you, Gretchen and Val, for all your contributions and for everyone's questions and staying with it. Thank you, Chris, so much.
Sure, no, thank you. Thank you again for the opportunity. Really appreciate it. And, you know, if you have any other questions, definitely feel free to reach out. And otherwise, have a great rest of your day and the rest of your week.
Bye, everybody.
All right, thanks everyone. Bye-bye.
Bye.
Bye-bye.